All right. So how are we doing here are we doing okay on screen time, technology? We're all good?
Look good.
We look good. All right. Deal. All right, folks. Wanted to thank everybody here for joining us today. As we all know, we've had a significant impact to businesses, real estate related and non-real estate related, over the past month and a half, 2 months or so. And while I have myself, Matt Perry, you want to?
I am.
There he is, dressed up and everything. I love it. While we here at AA Real Estate certainly don't say that we have all the answers, as we were going through this process of preparing for all of these changes, we noticed a bunch of different processes that we were taking, and we had relied upon some of our partners across the country and what they were doing to prepare in all of these changes here. So while we were going through it, we also know that there were going to be some major incentives that were coming out. There's some that have already come out for business owners, and there's some coming out for self-employed and 1099. And while we're going through this process, we kind of thought to ourselves, well, this probably is better to share publicly. And while most of our network is mainly real estate agents, real estate investors, contractors, handymen, vendors, most of this, if not all of it, is applicable to every single business that we see. So we wanted to just kind of go through, and Matt, you can jump in where you like to as well. And about after our segment, we're going to have Ron and Anthony from Restivo Monticelli. I said that right? Monticelli?
Monticelli.
But I was close.
We're close.
After our segment, you guys are going to have the very smart individuals that are going to be talking about specifically the government programs and incentives that are out there for 1099 self-employed. So I'm going to jump in. If you guys are here and you have some questions, just because we do have a good amount of people, feel free to just type your questions into the chat box. And our awesome team, Brianna, Jared, Matt, myself, we'll all be kind of moderating those questions as we kind of dive through. So we'll just jump right in here. So in our, wonderful, there we go. So disclaimer, at least from Matt's and my perspective, right? Any data or tips provided are considered informational only. We're not, while we're professionals, we're not professionally licensed. We are not we're not attorneys or hold any specific designations. So we just have to kind of put the slide in before we always talk. We do hold real estate licenses, but we're not acting in that capacity as an agent today. So here we go. This is kind of where I jump in, right? There is an awful lot of fear out there. Fear in the news, fear on social media, fear in the streets. And I don't know who's even tried to go to a grocery store. God bless those people for still working. But there's an awful lot of that out there. And you have to, the way I look at this problem, right, we break it down into two different impacts. Number one, on COVID-19, there's a health impact. That was the whole point of this, right? So the question's floating through all of our heads. How can I keep myself and my family safe during this time, right? We're staying inside, we're social distancing, only essential employees are out there working right now. We're not being in groups of over 25. So really beyond that, I just would encourage people, and you'll see this again in the slideshow, stay off the news. Like, you're gonna see and you're gonna hear some terrible things, maybe even the next 2 or 3 weeks. But if you guys can just kind of keep to yourselves, and we're going to talk about using this as an opportunity to get closer to your business, get closer to your loved ones during this time. So, and more importantly, beyond even not being fearful, I encourage you and challenge you, how can you be a leader in these times? A business leader, a family leader, and that sort of thing. Well, we won't talk about that specifically, but I want you just to have that question in the back of your head. So this is more mindset, right? And it all starts with mindset. What are you doing for routines in the morning? Without an office to go to? Well, a lot of self-employed people already have a home office, right? You guys are not actually even going to an office every day. So you might be further ahead than a lot of those other individuals that would go to an office every day, and now they don't have a routine to follow. So what is your routine in the morning, and how are you keeping yourself healthy? How are you keeping yourself fit? How are you addressing all the important things in your businesses? And then we have financial impact. And that's the big one today, right? How has the COVID-19 impacted my business as a self-employed individual? as a real estate agent, as a real estate investor, as a contractor, handyman, as an antiques salesman, as a solar sales representative. We have a lot of people on this call today. And I encourage you to obviously put your questions in the chat box. If we're not specifically relating to you, we'll do our best to answer questions as we go. And where do I start? So as Matt and I were getting some advice from our financial professionals, a couple of which are on this call, we were getting advice from our mastermind groups. We figured it was worth sharing. And this is kind of what we did. Number one, being mindset still was what can we control and what can't we control. I love this picture. It's going over the internet. I'd love to share it with you guys. What we can control ourselves, and ourselves is all we can control. Our attitudes, our watching the news or not watching the news, limiting social media, kindness and grace for other people. We can't control the people. We can't control if they're social distancing. We can't control the news and the media outlets and what they're putting out there. We can't predict what will happen. We don't know how long this is going to last. So it's not even worth thinking about. That's honestly what I'm here to try to share that with you. Because once you learn you're only in charge of your own brain, it helps a little bit. So here's our segment. Matt, did you have anything, your mindset guy, did you have anything to add on this one? Oh, is he muted? That's all right. Brianna, maybe you can, well, he's a co-host. That's okay. I'll keep going here. Step one. So here's what we did on, here's what we did for our business, right? Finding out where you are. How much oxygen is in the tank? And what I mean by that is how much cash do you have on hand and how much accounts receivable are due to you? This is applicable to every business. So you need to actually ask yourself this question. If things don't change for the next 3, 4, 6 months, how are you going to pay your bills? And how long do you have before cash runs out? And that's literally identifying where we are, right? That was step one that we had to do, that we did as a company. How much oxygen is in the tank? How much cash do you have on hand? How much do you have for accounts receivables? And we'll talk about strategies to collect on those accounts receivables pretty soon. And then the next question is, how much are your critical monthly expenses that you pay just to keep your own business going, just to keep the lights on, right? I have an example of a few of them in here today. Again, I'll defer to Ron and Anthony later, but we have rent, mortgage, utilities, vehicles, payroll, and any sort of critical tools that you use or licenses that you have to keep up to keep your business the way it is, right? You add those numbers up on a monthly basis and you find, not necessarily in your cost of goods sold, so if you're a real estate agent, like a cost of a transaction, right? If you're a contractor, your costs of a job or a job site, not necessarily those costs, but just the regular monthly fixed costs, stuff that you got to do to keep the lights on and what you're paying on your overhead. That's your monthly burn rate. So once you have your monthly burn rate and you know how much cash you have on hand, you kind of know how long you can go just with your cash on hand. But luckily, there's a couple other strategies that you can use that we did use too. Next step that Matt and I did is we took a hard look at our P&Ls, Lori on our bookkeeper as well, right? And we just ruthlessly slashed expenses that we could possibly slash. Tons of auto pays hitting the bank account that have been hitting auto pays, hitting bank accounts for months and months and months and months. I'm sure you guys have them too. And what the heck are these things, right? Well, if you identify what these things are and ask yourself, do I really need these in this tough time when I'm trying to generate cash, right? So all the auto pays that are hitting your statements, any sort of monthly dues or subscriptions that maybe aren't completely critical to you doing what you do on a day-to-day basis. And here are the other expenses that you might want to consider, right? Utilities, car payments, rent payments, bank interest payments, staffing and payroll. It comes down to it. If you do have a staffing or payroll, hopefully you've already taken advantage of one of the CARES Act incentives, which I'm going to let Ron and Anthony chat on, but you might have to let some people go. This is a very, very hard and tough time for all of us, right? So you might have to let people go. You can also look at it as an opportunity to let your weaker people go. And I'll tell you right now, there is a flood of highly talented individuals right now on LinkedIn that have just been severance, that have just been furlough, that have just been whatever, right? If you need to hire people and you have a weak team player, this might be your opportunity. I'm just going to put that little nugget out there. And then marketing tools as another one, but just be careful. You want to keep your marketing open and up so that when this does die down, people will be contacting you for your services. Or during this crisis, people will still have you out in front of them with the right message at the right time, at the right place. And you need to keep the marketing going. Step 3 on our side, so after we slashed expenses, now we're going to communicate. This is what you guys should absolutely be doing. If you've been impacted by this virus in any way, and most everybody on this call absolutely has. Real estate agents, right? Transactions are falling through. Lending has been tightening up. Liquidity has been drying up. Huge, huge issues for real estate. Huge issues for contractors trying to make it through on job sites, right? If your liquidity is drying up, your trade lines are shrinking, or you can't even be let into Home Depot because they only allow 25 people at a time in there. All of these things mean that it's impacting you and your businesses. So encourage you to reach out. I thought that this was going to be a really tough call to make, but we have a property management company, as you guys, some of you know, and we were anticipating a 60 to 70% rental loss rate, right, for what we had for our residential rentals. And in anticipation of that, we followed the lead of a couple of our industry colleagues, and they started reaching out to people quickly and early, reaching out to mortgage lenders. Listen, I don't know what my ask is yet, Mr. Lender, but I just got to ask you, we're anticipating this. Do you have any programs available? And I'll tell you what, we are 4 for 4. All of our mortgage lenders have worked with us either on interest only, or the 3 of them were for deferrals of payments for 3 months until August 1st. It was just an ask because everyone here has been hurt by this. So if you have a need to ask for this and you've been impacted, reach out to your mortgage lender, reach out to your landlord. If you're a tenant paying, whether it's a commercial landlord or if you're literally living in an apartment community and your income has been affected, reach out to your landlord, see if there's a way they can work out for your rents, or maybe a deferral on that. Your auto lender, they're doing interest only on a lot of loans right now. Credit card companies, they're doing deferrals or interest-only payments. We have Amex, Chase, and Capital One. And if you do have staff or teams, very, very important, especially real estate agents or contractor crews with teams under you, whether they're W-2 or 1099, you need to be keeping in constant contact with these people and know that if it comes down to it, you might have to make some really, really, really tough calls. And you can ask them. If you have all superstar A players on your team, you might have to have a conversation with everybody and say, hey guys, here's where we're at. I don't want to let anybody go. Number 1, do we have any volunteers to go on unemployment for a while? And I'll take you right back as soon as business picks up. Or number 2, are you all comfortable just taking a pay cut for now while we just get through this really tough time? And I promise you that if I'm going to be here for you during these times as much as I possibly can, and that I'm going to take care of you as best I can in this time, but it's going to be hard. These next 4 to 6 months, no one knows what's going to happen. And then accounts payable. I keep saying 4 to 6 months, and I don't mean to tell everybody that that's a number I pulled out of a hat, right? It could be. I'm not saying the virus is going to be over in 4 to 6 months. It should be hopefully over earlier than that if we start to flatten this curve. My thing is the economy right now, especially with the liquidity that we're seeing drying up in these markets, everyone's going to take a huge hit here. And the market, the real estate market specifically, is going to have a correction. And we're here to prepare for that, right? So here's our step 4, which is raise more cash. So if you're trying to get that cash on hand to increase your amount of oxygen, so if you can last 2, 3, 4 months with your monthly burn rate, now you got to raise more cash. So what about selling stuff on Facebook Marketplace? There's people out there right now that are using this crisis to flip furniture, flip electronics, flip cars, flip stuff on Facebook Marketplace. They're there, they're liquid. They were waiting for a correction like this. So don't question their morals or their ethics. If you need cash, they're still out there buying, right? And then actively collect on accounts receivable. If you have accounts receivable right now as a 1099, as a contractor, maybe you want to offer an incentive. Say, hey, listen, I know times are really tough right now. I want to work with you too. How about this? If you can, take care of this AR today, I'll give you, a 20 or 30% discount on it. Or if you can take care of half today, there's a 10% discount, and half in 30 days is another 10% discount. Just reach out. Just try to work something out so you can collect this cash now to help your cash on hand and your burn rate. And if you can't self-generate more cash, which also includes doing more transactions if you're in real estate, which we'll talk about later, debt. Maybe you want to raise some debt. Collect on your lines of credit. Ron and Anthony, if you guys are here, have you guys been seeing lenders kind of tighten up on their liquidity right now on their lines?
I've seen them tighten up on their lines. I've also seen if you have margin debt out on some of your investments, you might be seeing a margin call just based on how the stock market has dropped. But I do know many bankers, at least the ones that we've been working with, have been very considerate of the situation and been able to either extend or defer some payments on loans or line of credits.
For sure. They've been able to work as best they can with them. I have been advised, and I'll tell you guys right now, like if you have an open line of credit right now and it's not fully maxed, only because of what we're seeing in the commercial finance realm, like Ron just mentioned, margin calls in the Wall Street have been coming due, right? So even we had big commercial lenders in the real estate investment space that dried up overnight when they had all these margin calls in Wall Street and all their funding dried up. So we're not too sure about if you have open lines of credit right now and let's say they're paid down to like 10 grand on an $80,000 line or something, we're being advised to just pull that money out and keep it and just hold it aside and put it in a different bank so that if they do decide to pull other lines of credit because of the uncertainty of the market, you at least have that cash available even though you are paying interest on it. All this stuff that I'm telling you guys, know that you have to be smart. Everything here is in this part is debt. And lastly is this equity side. Well, if you need to raise capital and there's no other way to do it and you're not going to live through these next 3 to 6 months, maybe you want to raise some equity, sell some shares in your business in exchange for a cash partner or some cash flows coming in from people who are looking at a stable business, knows that you can weather the storm, but you just need cash to do it. And for those of you guys listening, we appreciate, we have a lot of participants on today's call. Just a note as to who we are. If you've never met us before, my name is Nick Allerud. My partner, Matt Perry, and the whole team, we have a whole bunch of different companies that we work with. We have a home buyers team where we purchase homes, and we are still actively buying in the greater Boston and southern New Hampshire markets. We have a debt settlement firm, Short Sale Mitigation. So if you have anybody who's facing some trouble, this will obviously be a huge channel that we're gearing up to help lots and lots of people in the next 6 to 12 to 18 months, because we feel like this is going to be, if people aren't paying their mortgages now, that money doesn't go, that money still needs to get paid. It doesn't go away, right? It's either tacked on to the end, or in some cases, the lenders are tacking on a 3-month lump sum payment due August 1st, which I don't know if that's right, because I don't know people who can come up with 8 to 12 grand. But either way, we have a debt settlement firm, Short Sale Mitigation. We have a brokerage, a retail and investor-friendly brokerage, AA Premier Properties, based in the greater Boston area. If you're a real estate agent, we have a bunch on this call. You can take a look at our site there. And we also have a property management company, a coaching company, and an investment company. But today's not to be sold on. I just want to tell you guys where we come from so you know roughly what industries we support and where we're where our home base is. I know there's some people on this call. We have a solar company sales rep. We have an antique shop owner. We have a bar and restaurant owner. Oh man, I can only imagine what you're going through. So, state of the market. You guys don't want to hear from me much more. So I'm excited to get Ron and Anthony on here real quick, because they're going to talk specifically about the government incentives that are available. But here's what we're seeing right now, right? State of the market. Cash is flowing out of the financial markets into stable, tangible assets. Real estate being one of those assets, right? They're also flowing into stable businesses that have shown the test of time, that are well liquid, that have cash on hand. Investors are flocking to different businesses and real estate assets and gold and silver and that sort of thing. If you are in the real estate business, or if you are a contractor, or if you're a restaurateur, or if you've got a business and you had a track record prior to this COVID mess, I don't think there's ever going to be an easier time than now to raise some capital and be prepared for what is going to happen in this economy. Because we are facing a correction here. I happen to think it's going to be a fairly large correction. And I'll defer to the financial professionals as to what they see coming. But you have to look at this as an opportunity, not a detriment. Business might be slow now, and it might be slow for the next 2, 3, or 4 months. But weather the storm. And that's our job here today for our segment, is to teach you how to weather that storm, which is knowing how much cash you have on hand, knowing your monthly burn rate, pulling in cash anywhere you possibly can right now just to weather the storm, so that you can then be prepared. And meanwhile, you're working on your business processes. You're working on your systems. You're going to be working, and you're putting out messaging so that when this eventually fog starts to lift, you are the person that has been reaching out to your clients, your vendors, your teams over the past 3 months. There's never been a better time to be prepared and use this as an opportunity. Remember that this too shall pass. And I talk to my team at least once a week. We go over the 3, 2, 1, take a breath model, right? If you're starting to look at the news, you're on social media, you're poking around, you're starting to feel that fearful feeling well up in your stomach. Just 3, 2, 1, take a breath. And you look at the facts. What can you control? What can you not control? And focus on what you can control, which is you, your mindset, your time, your attitude, right? Focus on your business in this time and on your loved ones while we're all in self-quarantine land, or if you're not essential, and set yourself up to dominate. So I'm very happy. There's been other huge efforts that we also as a company have been going through with a lot of the help from Ron and Anthony of Restivo Monticelli.
Correct.
Monticelli, got it. They're CPA firm based in Rhode Island, but they service, they're a national firm. They're servicing, we know a lot of people up here in New England, and they have a great focus on self-employed individuals and also real estate-based employees. But last transition, we've also been working on all of these. There's a ton of incentives that just came out with this CARES Act. $2 trillion the government is injecting into this. And it's, as a 1099 or self-employed business person, you absolutely have a right to know how this can benefit you if you need it. And that's why I have these two awesome individuals to join us today. Ron and Anthony, thank you guys for coming on.
Appreciate it, Nick. And thank you for your team for having us. This is a crazy time to be in. I think we were talking yesterday. I don't think I've ever worked so hard in my life. And I haven't even really been doing tax returns. It's just been nuts. I'm going to start it out by giving you guys kind of an example of kind of what I'm seeing in the marketplace. And it was kind of alluding to what I was getting at before there, Nick, is I have a client who he was pretty successful in his former profession, had a ton of investments. What he did was he leveraged those investments last year to buy 20 summer rental properties. What ended up happening is the market dropped. He leveraged it all on margin. He got the margin call. He had to sell all of his securities as a loss. And now what's happening with his real estate portfolio is they're all summer rentals. Every one of them has canceled. Every one of his tenants that were coming down to Narragansett, Rhode Island, Newport, Rhode Island, they all canceled on him. So he paid for all these rehab costs for all these rental properties, thought he was going to kind of reap the benefits of being in the real estate market in the summer months for Rhode Island down at the beach. And what's happening now is he has no income coming in. He's got mortgages. He's got bankers calling. So we're seeing that across the board with our clientele, is that it's a very tough time for everybody, real estate, manufacturing, sole proprietors. So we're hoping that we can be here to help you guys out, talk to you about some of the incentives of the CARES Act. This is actually the third leg of legislation that came through. The first one was kind of really just to let everyone know that you have till July 15th to file your tax return. The second one provided some relief for people who had to be at home, paid family sick leave for those individuals who have to be at home to care for someone that is diagnosed with the coronavirus, or if for some reason that they didn't have any child care that they could be home, they could use some sick time and they wouldn't get dinged at work for it. So this third leg is really what everyone wants to kind of talk about, and it's the CARES Act. It's a 900-page legislation that I think was unanimously passed, which is rare to see nowadays in Congress, on March 25th. So it's been about a week and a half, 2 weeks that we've been able to get our hands around this act and some of the important provisions. So just give you a little bit about ourselves, and then we'll get into it. My name's Ron Dean. I'm a principal, and I head up our tax practice. We have an office in Providence, Rhode Island, and Boca Raton, Florida. But we, like Nick said, we service all New England. And then on the call, I have my tax manager. I'll let him introduce himself.
Hi, everyone. My name's Anthony Pagano. Like Ron mentioned, I'm a tax manager at Restivo Monticelli. Do a lot of work in the real estate space. So happy to be on today and happy to provide any assistance that I can.
Great. So what we tried to do is we tried to tailor our presentation to kind of the group that we have here. Sole proprietorship, self-employed, maybe some independent contractors, and kind of an overall real estate feel here. So we've identified kind of 8 things that we see in this CARES Act that we think you guys might want to be aware of, not only for maybe this year, maybe for prior years to go back and amend some tax returns, but also some important SBA lending dates that are coming up, and specifically for the sole proprietors and independent contractors tomorrow with this Paycheck Protection Program. Anthony's going to get into that towards the end of the program because we feel like we're going to have a lot of questions on that. So we saved that till last, just so it's fresh in everyone's mind and they can ask questions at the end of the program. So the first thing that I want to kind of talk about with everybody is the economic stimulus payments. I'm sure everyone's heard in the news that we're supposed to be receiving some economic stimulus payments. And actually, as long as you were direct depositing your previous tax refunds, I think the checks are going to start today and really ramp up next week to see if you qualify for the economic stimulus payments. The stimulus payment is directly designed to provide immediate cash to the American people. The stimulus payments as follows. You're going to get $1,200 if you're single, or $2,400 if you're married filing jointly. And then you get an extra $500 for each child or dependent you have under the age of 17. Now there's some phase outs here, so not every millionaire is going to be getting a $1,200 check. It goes based on your adjusted gross income. It's $75,000 if you're single, and it's completely phased out if you make $99,000 if you're single. And for a married filing joint return, it's $150,000, and it's completely phased out if you make $198,000. So to back up a little bit on the stimulus payment, there's a little bit of confusion of what's going on here. Is they're going to mail everybody checks based on their 2019 tax return. So if you were single and you made under $75,000 on your 2019 return, they're going to mail you a $1,200 check. The question I get is, well, what if I didn't file my 2019 return yet? And many people haven't, because now we have up until July 15th to file the return. They're going to go off of your 2018 return. Now, depending on how 18 could have been a little bit different than 19. You could have made more money, you could have made less money. But really what this stimulus payment is, it's an advanced credit on your 2020 return. So essentially what's going to happen is whatever payment that you receive now is going to get reconciled with your 2020 income. And the point of that is they expect a lot of people to not have a lot of income for 2020 because most of us are, I think another 6 million people were on unemployment again today. So they're expecting a lot of people's 2020 income to go down. But obviously we don't have 2020 returns done yet. So what they're trying to do is get people checks out based off of a 2019 or 2018 return. Now, if your income or maybe even your dependents change from 2018 or 2019 to 2020, that will all get trued up on your 2020 return. So you might get not the max amount of a check right now, but when you go for your 2020 return, you might receive a refundable credit for the difference if your income changes based on the coronavirus.
Gotcha.
The next thing that I wanted to talk about is retirement plans.
Hey, Ron, too, in case you need it, I think I gave you access to just click on the screen and you should be able to go through the presentation.
Can I?
Yeah.
Oh, there we go.
That's cool.
That might be helpful. Yeah. So let's talk about retirement plans, because there is a nice little feature with retirement plans right now, in that if you are desperate for cash, whether it to be to keep your business afloat, to just make sure that you have a little bit of cash to pay your bills, one thing that you can do is you can take a distribution from one of your retirement plans, call it a traditional IRA, a SEP, a simple IRA. You can take the distribution from the retirement plans, and regardless of your age, there won't be a 10% penalty if you meet one of the two exceptions, either you, a spouse or a dependent, was diagnosed with COVID-19, or you experience adverse financial consequences as a result of this, being quarantined, furloughed, laid off, reduced working hours. You can take, it doesn't matter your age, you can take a distribution from your retirement plan and not pay a 10% penalty. The 10% penalty usually comes as if you're under the age 59 and a half and you take an early distribution from your retirement account. You're usually hit with a 10% penalty. But if it's related to one of those two things that I just discussed, there's no 10% penalty. But there is still an income tax feature here. If you take a distribution from your retirement plan, you're still subject to income taxes. But what you can do is you can defer that income taxes over the next 3 years. And then if you pay it back within the next 3 years, you don't have to pay any income taxes on it. So they're trying to really be flexible with being able to take some cash out of a retirement plan that you've had saved up for a number of years to combat whatever you're dealing with right now. Like I said, whether it's being furloughed, laid off, or you were potentially diagnosed with this COVID-19. It's crazy how much this is starting to hit home. I just had a really good friend of mine. His mom got hit with COVID-19 yesterday. So it's definitely widespread. I think we're doing a great job staying home, but the CARES Act and legislators were trying to help people out by being able to take some money from their retirement plan to help out with their situation.
Ron, there's a question in the chat box. Does the RMD waiver apply to inherited IRAs as well, or is it strictly any sort of IRA that existed through somebody's retirement account or through some sort of work account?
So the legislation is not clear on that. So one thing that you'll hear is we have not got a lot of guidance from the IRS yet. We've gotten some guidance from the SBA loan, but we haven't got a lot of guidance from the IRS. So what typically happens with legislation is Congress puts out legislation, and then the IRS puts out regulations to kind of give everybody Congress's intent on what's supposed to happen. I would say in that question, my opinion would be that you should be able to be waived on that RMD for an inherited IRA if you used it because of those two situations. But again, until we get some further guidance, I would not take that out right now. But again, the goal is to be able to. I see the question. The RMD is waived. Again, I would see that yes, the inherited RMD would be waived until we hear further guidance. Because the whole point of this is to not require people to take a distribution, require increase in taxable income for the 2020 tax year. So again, I don't have great guidance on the inherited IRAs, but I do know required minimum distributions from like a traditional IRA or a plan from a work is waived for 2020. Oops.
Oh, I see. You can hack into the whole computer. I like it.
What happened there?
Yeah, I can get it back here.
All right.
Get it back here. Let's see. Slideshow. There you go. Just tap on the screen when you're ready.
Gotcha. So one thing that's going to be pretty significant, I think, for the group here is there's a potential to defer, if you're an employer, the payroll taxes, or if you're self-employed, your self-employment taxes on your Schedule C. The employer can defer their share of the 6.2% of Social Security tax that would be due through December 31st, 2020. You can defer 50% of the amount until December 31st, 2021, and the other 50% until December 31st, 2022. The good thing with self-employed individuals, they can do the same. So when you go to file your taxes, if you haven't already, you can defer the self-employment taxes 50% up until 2021 and 50% up until 2022. That's a pretty significant benefit, but you can only take part of that benefit if you don't have a paycheck protection loan forgiven. So essentially what I think they're trying to get at here is with a paycheck protection loan, that's an excellent program. They don't want you to double dip. They don't want you to get that program, and they don't want you to also get this deferral of the payroll or self-employment tax.
And just to piggyback on that, Ron, I know you're about to get to it, but folks, if you're on this call, that's probably one of the most significant incentives that the government is rolling out is that paycheck protection loan, and it's a forgiveness program. So if you do it correctly and you follow and dot all the I's and cross all the T's, Ron Anthony will explain to you how you can actually get that money given to you, granted to you, and forgiven as a loan. But so stick with us. He's going to go through all the incentives. And thank you, Ron, for didn't mean to interrupt.
Oh, no problem. Yeah, so I think like if for some reason you don't get the paycheck protection loan, this will be the kind of your backup plan, is to be able to defer some of your self-employment taxes up until 2021 and 2022. And again, I'm going to try going through the next couple of slides. What's going on?
Sorry.
There we go. No.
Just got to click on the screen. It'll advance.
Yeah, I do.
Oh,
there we go. I'm going to go through the next couple of slides because I know everyone wants to get to the Paycheck Protection Program. I want to leave a lot of Q&A, but there's some other good things in here that you guys might be able to utilize for tax purposes here. Another good benefit of the CARES Act is this employer retention credit. It's a 1-year refundable credit against your employer share of the Social Security tax. You just need to meet one of the following 2 tests. Your business operations were fully or partially suspended by order of applicable government authority, which I think most of us probably had that, or your business continued operations, but there was a decline in gross receipts by more than 50% compared to the same quarter in the prior year. So essentially what you'll be able to get is you'll be able to get a credit equal to 50% of the qualified wages paid to an employee. Those qualified wages are capped at $10,000 a quarter, and you can continue to get this credit until your year over year or quarter over quarter, I should say, is down to 20%. So your business is only down 20% from the quarter for the previous year. But again, this program is not available if you take advantage of the Paycheck Protection Loan. So again, it's another fallback for employers if for some reason they don't qualify for the Paycheck Protection Loan.
Gotcha. And this is more, just to clarify, right? This is for people with W-2'd employees, or could it also?
Correct.
Okay, that was only W-2 employees. Got it.
Only W-2 employees. Yep. One of the biggest things that I've liked about this CARES Act is this qualified improvement property fix. So this would be for a lot of the real estate clients out there. Qualified improvement property is if you do any improvements to a non-residential building, and they have to be interior improvements, and they have to be non-structural. If you do any of those types of improvements, the CARES Act fixed a drafting error in the 2017 Tax Cuts and Jobs Act and gave it a 15-year life as opposed to a 39-year life. That means you can depreciate the improvement over 15 years as opposed to 39 years. And the biggest benefit is any property that has a 20-year or less depreciable life is qualified for 100% bonus depreciation. So essentially, you can write off the total cost of that improvement as long as it meets the definition of qualified improvement property in the year that it was placed in service.
There we go.
So
like that.
I think that's a significant win for the real estate community. And the better part about this is it's retroactive to January 1st, 2018. Therefore, you can go back to your 18 tax return, and if you had to capitalize and depreciate this over 39 years, you can look to amend that tax return and hopefully take advantage of some additional depreciation based on the fix in the drafting error.
And that's not residential, though. That's only would a larger multifamily count, Ron?
No, I don't think a multifamily is going to count because it's residential. It's going to be mostly your commercial properties.
I'd walk the line on a 6-unit and up, but that's just me.
I would check to make sure that your state's going to conform to this CARES Act. It's totally new. I know Massachusetts doesn't allow for bonus depreciation, so there might be an add back there, but usually a federal benefit more than outweighs any sort of Massachusetts tax that would be there. So a net operating loss. So previously, under the 2017 Tax Cuts and Jobs Act, they removed the ability to carry back net operating losses. You could only carry them forward. Essentially, what the CARES Act is doing is it's going back to the laws previous to the 2017 Tax Cuts and Jobs Act. Net operating losses arising in 2018, 19, and 20 may be carried back up to 5 years. And then what they're also doing is they're allowing you to take that net operating loss that you might have in 2019 and 2020. You can offset 100% of the taxable income, as opposed to the Tax Cuts and Jobs Act said that you can only offset up 80% of your taxable income. Again, I think this is a huge win, especially in the real estate space. Where I see this being pretty beneficial is, let's say in 2018, you had some significant improvements to a non-residential building that you can now go back and take 100% bonus depreciation, which will now put you in a loss situation on your tax return. You can take that loss and then carry it back 5 years to recoup some taxes that you paid in the previous 5 years. Again, you got to look at your state law to see if they also allow carrybacks. I think I just heard a question.
Yeah, I've actually got two for you, Ron. The first question was if we could go back to the bonus depreciation there. Does it apply to mixed use as well, or is it strictly non-residential, as you kind of drew that line in the sand a little bit? Where does mixed use come down on that?
I think you would have to wait for regulations on that to see if they'll allow mixed use properties to do that. Again, if the person wants to reach out to me on a question in my email and give me specifics on the detail, I'll be more than happy to help them out.
And the second question is on the stimulus package for those who are looking to go ahead. And Andrea, I'm sorry to try to read between the lines on this one here. If you were going to apply for the paycheck protection or one of those small business loans, if it's going off of your previous tax bill, essentially, and you owed money to the IRS, how does that affect you in any way, shape, or form?
I guess I'm a little confused on the question. Maybe they can clarify, because the Paycheck Protection Program is a little bit different than what I was talking about there with some of the credits. So again, if the person wants to send me an email with some clarification, I'm more than happy to. And our email address is at the end of the presentation that they can shoot me an email, and we're more than happy to help out.
Oh, sorry. Go ahead, Ron.
Oh. I'm trying.
It's maybe my bad. Let me get rid of this. Oh,
there we go. Another thing that the Tax Cuts and Jobs Act put into place in 2017 was they limited the amount of losses that you can take on your tax return. For a single person that was, they limited the amount of losses from a trade or business. For a single person that was up to $250,000. For a married filing jointly, that was up to $500,000. So what they're saying is they're going to suspend that limitation, and they're going to suspend that retroactive to January 1st, 2018. So again, going back to my example with the qualified improvement property, if you can go back and amend a tax return, take that depreciation, you're not going to be limited to the amount of losses that you can take in that year, and you're also going to be able to carry back those losses up to 5 years to recap some additional taxes. And a huge benefit too is if everyone remembers, one of the biggest noteworthy items of the Tax Cuts and Jobs Act was the lowering of tax rates. So if you can take a loss now and carry it back to a higher tax rate, that's a huge benefit. So if you can take any advantage of any of these losses, it'd be great.
Whenever that happens, we'll just click on that from current slide up there. There we go.
All right. So I'm going to hand it over to Anthony. He's going to go into probably the most talked about aspect of this CARES Act, which is the Paycheck Protection Program. I know there's a due date coming up tomorrow for a number of sole proprietors and independent contractors, and this is probably one of the things that you guys wanted to talk about the most. So we wanted to make sure we left some time. Anthony's going to go through the Paycheck Protection Program. He's also going to hit on the EIDL loan program, which we're seeing is a little bit advantageous for real estate investors. And we'll stop and we'll maybe answer some Q&A after that.
Awesome.
Thank you very much. So I can just preface this by saying I don't know if I have the ability to click through the slides. If someone could just help me out with that.
I didn't have the ability either.
I can grant you that power, Anthony.
Yeah.
Okay.
Is this the next slide for you for right now?
If you could go back one, the first one was, there we go.
Okay. You can start talking and I'll figure this out.
Okay, so so the Paycheck Protection Program, given the acronym, the PPP loans. This was established to incentivize small businesses and the self-employed to maintain their workforce throughout the crisis. And just by looking at the name of the loan, Paycheck Protection, the goal is to have small businesses maintain their employees and maintain payroll, essentially to try to keep as many people off of unemployment as possible. Just another way to keep money flowing through the economy. And I mean, it was set up for small businesses, but also the self-employed in the sense that, oh boy.
I'm coming back. Sorry, keep going. I'm just trying to figure.
In the sense that, someone might say, well, what if I don't have payroll? Well, as a self-employed individual and an independent contractor, the fact that you're earning income and that still qualifies. So I'll use those two terms interchangeably as far as payroll costs and net income from self-employment, because essentially we're going to use those, in a lot of the discussion that we're going to have. And as of right now, we understand the guidance that's out there to have those be one and the same. So as Ron mentioned, starting tomorrow, applications can be submitted to any SBA approved bank for these loans. I include a link down at the bottom of this slide. I don't know if anyone has the ability to access it, but the application is through that link. I can tell you that a lot of the banks that we've been dealing with the past couple of weeks have had a unique application process from bank to bank, whether it be upload through a portal, fill out a completely different application, online only. So it's going to vary depending on what bank you use. But as I mentioned, tomorrow is the first day for self-employed individuals and independent contractors to apply.
I'll jump in on that too and just share. So we have 4 different business banking relationships, and it was true. Like I literally started going through the SBA website, like that borrower application, which is probably where that links to, right? Is the SBA.
Yep.
Like as soon as you go through all that, it's great for people to start there, so you have the information available, because the bank is going to need at least that information, but probably plus more information, and it's going to be on their template. So it's good to have the information ready, but when you guys have your own specific business lender, and forgive me if I'm wrong, Anthony or Ron, I'm seeing that they're being so overwhelmed and inundated by these applications that they're essentially saying we're only going to focus on people who are our customers first, who have deposits with us.
That was actually going to be my exact question, Nick, to ask either Anthony or Ron. One of the questions that we get all the time, or have been getting the last couple of weeks, and we've been hearing in our mastermind groups as well, is it best for me just to go into the bank where I have my lines of credit, that I have my business checking account, that I have my business savings account with that already know who I am and have a level of familiarity with me? Or can I just go to a local Bank of America branch or Wells Fargo or Chase Bank and just walk in and say, I'm here to apply for the PPP program. How can I fill out a loan?
You're going to want to go to your bank. And the reason why is, and I think Nick was alluding to it, is you can go to a different bank, but what's going to happen is, and what we're hearing is, you're kind of going to the back of the line. They're going to take care of the people that have been banking with them first. So I would go to your bank as long as it's an SBA approved lender and that they're doing these loans. So a lot of these, the application's very easy. A lot of these banks have an online application that you can just fill out. But yes, you're gonna wanna utilize your bank as long as they're an SBA lender. And then if you don't have a bank that's an SBA lender, then you can probably look at some other options.
Gotcha. Sorry to jump in. We'll talk about our experience after if you don't get into it. But yeah, thank you. That was good.
And I see a lot of questions pouring in. I don't know if we want to keep knocking a couple out or save them for the end, but I'm open.
I've been trying to answer the chat while you're talking, Anthony. So
okay. Cool. Okay, so just to hit on my last point on this slide, the big draw to this program is the tax-free forgiveness potential. So a way to think about that is, tax-free forgiveness is so important because oftentimes when you have a loan forgiven, you have to pick up cancellation of debt income, and there's an opportunity here to be extended that loan from the bank, to use those funds for qualifying costs, and then to not have to pay the amount of the loan back for which you used those qualifying costs. So that's essentially what a lot of people are being drawn to is, everyone's talking about free money from the government, and I'm here to tell you that's exactly what it is for the qualified costs that I list there. So
I'm trying to come up with that link too. I know that people couldn't see the link that's on that PowerPoint, but if for the viewers here, sba.gov, you go to that website, then there's a button at the top that says coronavirus relief options, click here, you click there. And then there's another button that says additional resources, you click there. And I'm going through that site, and it seems to be that I'm looking for the actual application, which is there. But it's an attachment. It's a PDF. So if you go to the SBA.gov, you're gonna end up finding it. Just keep clicking the buttons.
Thanks, Nick. It's the one on the SBA website is a PDF, so that's exactly right. I would recommend, ahead of time, just take a spin through the application. It's only a couple of pages. Just get comfortable with, what you'll have to submit. And then, like we mentioned, you'll probably have to log onto the bank's website and input the same information, but, and like Ron mentioned too, pretty straightforward. All right, so how do I figure out how much I can apply for? What's the loan amount? So I apologize for the formatting here, but essentially the loan amount is equal to the lesser of $10 million, which is significant, or on average 2.5 months of your net income from self-employment or your payroll costs. So essentially, I have a couple of examples on the right-hand side that kind of take a very easy spin through, how to get to a loan amount under very straightforward figures. But essentially what you'll look at is if you have your 2019 tax return completed and filed, it's recommended to take a look at your Schedule C, which reports your net income from your self-employed activity. And then that net income number will just be divided by 12 to get your average monthly net income from self-employment. The same calculation can be done for payroll costs. So essentially, if you have net income from self-employment, and then you also have payroll costs, you would also get your average monthly amount of whatever you paid, wages, salary, health insurance for employees, retirement benefits. So that would all figure into that computation. So if I can just kind of direct your attention to the right-hand side, as an example, say on your 2019 Schedule C, you have net self-employment income of $96,000, and absolutely no employees, no payroll. The computation is limited to 100,000 per individual. So I have a 96,000, which is under my limitation. My average monthly amount of self-employment earnings is the 96,000 divided by 12, which gets me to 8,000. And then, as I mentioned, 2.5 months on average is the multiplier. So you'd be eligible for a $20,000 loan. Under example 2 here at the bottom, so it's a bit difficult to see, but net self-employment income, let's say you had 125,000 of net income on your Schedule C and you paid one employee $20,000 in salary, you would take, again, the lesser of 100,000 or whatever your net income from self-employment was. So in this instance, it would be the 100,000, and your payroll costs would also qualify, so that would be 20,000. So 120,000 all in total. Average is 10,000 a month. Multiply by 2.5, you'd be qualified for a $25,000 loan. So not to get too into the nitty-gritty of the details, but that's just a really straightforward example just to show you how to get to those figures.
Hey, Anthony, I've got a question which to date is still very confusing to me.
Sure.
So we have, and this specific webinar is a lot for 1099 self-employed individuals.
Right.
I myself am self-employed, but there's also W-2. Like if you have a company that pays payroll, but they're also paying 1099s out, does that, like, like, I guess they're paying out 1099s to vendors. They're also paying W-2 income. Do you include all of that as payroll costs, or just the, you know what I mean, just the payroll?
I see where you're going. Only the W-2 would qualify in that instance, because by virtue of the 1099s, if you kind of look at the other side of it, I mean, for self-employed individuals, they're being measured for their loan amount on the 1099s, their net income from their receipt of those. So it would be a little bit of double dipping if, you know, company A issued a 1099 to an employee and included that as their payroll costs, and then additionally the recipient of the 1099 went ahead and applied and included that same payment as their net earnings from self-employment.
Gotcha. All right. Thank you. So that those 1099 employees that, let's say, the company pays, that's the whole point of this specific program you're saying, that it's starting tomorrow. Those 1099s can then apply for their own payroll protection.
Exactly.
Got it.
Exactly. So the Paycheck Protection Loan amount, you know, just think about it as, you know, it's a 2.5 month stipend to cover payroll for your employees that are struggling right now, or just to facilitate 2.5 months of the income that, as a self-employed individual, you're missing out on due to the crisis. And this loan's payable over 2 years at 1%. Payments are deferred for the first 6 months, which is always nice to push those out. And the program does not expect to, there's a lot of focus on this program. A lot of people are applying, but you cannot apply after June 30th for this program. So you want to try to get in as soon as possible.
And I have a feeling, I don't know if you guys have a feeling on it. I was told that, you know, the sooner the better, because the money eventually will run out. Although he did go on the news and say he would print more, right? But
that's exactly
yeah. He actually
right.
came out today or yesterday and said they're looking to put 250 billion more into this program.
All right then.
All right. So, you know, we have our loan amount. The next piece, as I talked about, is the forgiveness. Essentially, you're in receipt of the loan proceeds. You take in the money and you use it, you know, over the first 8 weeks for qualifying costs, and it's forgiven. So just some detail on that. What will happen is, you know, say your funds come in on day one and you deposit them into your account. The clock starts where in those 8 weeks following that, from that day, you want to track and be diligent about what you're spending that money on. So essentially, what those proceeds that come in, if you're able to use them on those qualifying costs, which again are compensation, rent, utilities, and interest, anything you spend on those 4 areas will go into a bucket. And then after 8 weeks, you go back to the lender and submit a written request to have X amount of that loan forgiven. And what I would recommend doing is, asking for forgiveness in the total of those costs that you incurred in those 8 weeks. You'll have to provide support and documentation to substantiate the request. But essentially, once that's approved, that portion of the loan will not have to be paid back, which is, the jackpot in this program. So just a couple of other quick examples on the right-hand side. If I have a $25,000 loan and in the first 8 weeks I incur rent and wages of $4,000 and $15,000 accordingly, I have $19,000 that I've used in the first 8 weeks. My $25,000 loan gets knocked down to $6,000, payable 2 years at 1%. The other kind of caveat, I know if you're looking at some of those percentages that I want to throw in there, is there's a stipulation that 75% or more of your request for the amount of forgiveness has to be used on payroll. So essentially what they don't want to happen is, you take out this loan, the Paycheck Protection Loan, and you use all of it to pay back rent for the entire amount. That's not really the spirit of it. So at least 75% of whatever you request to have forgiven needs to be spent on payroll costs.
Anthony,
So-
if we can make it, oh, go ahead, Ron.
No, go Nick, go on.
If we can make it specific to a real estate agent, let's say, right?
Yes.
So they take their last 12 months. Is it the year to date, or can they also go April 1 to April 1 of this year?
For net income or payroll costs?
Oh, good question. No, I'm doing so it's a real estate agent and it's their self-employed. They're the only contractor, the only employee.
I'm recommending full year 2019 at this point in time.
Okay. All right. So they take all of their income from January 1 to December 31 of last year, divide that by 12, right? And then that's their monthly income, and they multiply that by 2.5.
Correct.
So now they have that amount they can apply to their local or business lender. I'm just kind of breaking it down for some agents. They apply to their local lender with whatever applications they might have, or Excel sheets, or gathering data, but they have to show. And then once they apply for that loan, let's say that they get it because the government's trying to push this money on the street as fast as they can. At that point, I would, tell me if I'm wrong, I would be suggesting they take that money and put it in a whole separate account, like a whole separate checking account, but they're paying themselves 75% minimum of that money, and they get the loan forgiven. Is that accurate?
So I don't think that's accurate. So the 75, yeah. So you couldn't turn around as a self-employed individual and pay yourself a W-2 and circumvent the system that way. I think that would be that's not in the spirit of the program.
Right.
Essentially, just to backtrack, you're absolutely right. I would highly recommend when you do a get approved, they're going to ask for what account you want that money deposited into. For tracking purposes, it's not a bad idea to have that go into a new account, just so you can track everything in and out of those loan proceeds. Very easy to go back in 8 weeks and provide those 2 months of bank statements and say, this is the loan proceeds and this is everything I used out of that dollar amount.
So I guess one of the things I want to jump in here, and me and Anthony were talking about this a little bit before the presentation, is that one of the biggest questions that we're getting right now from independent contractors, sole proprietors is, again, I just received 1099. I get 1099 for the income that I receive. I don't have any payroll. How can I get this forgiven, right? And I can tell you right now, it's definitely not clear. We're waiting on guidance from the Treasury on the loan forgiveness piece. But my hunch is that they're not going to go make you set up payroll for your Schedule C just so you can get this forgiven. My hunch is that the first 100,000, and you go through the arithmetic there, it's gonna be about $20,000. I think that's gonna be forgiven for sole proprietors. Again, I don't have anything concrete to tell you about that, but just in my opinion of how I read the law, that's how it's gonna be.
So
Gotcha.
as I mentioned up front, I'm kind of using net income from self-employment and payroll costs for this purpose can be interchangeable at this point in time for our understanding. So like Ron mentioned, there's a possibility you'll be eligible for forgiveness on the net self-employment income that you're approved for. But again, you just need some more concrete guidance on that right now.
Gotcha. So what I said is potentially true, but not known yet.
Correct. Yeah. No. No. I think what you were getting at, Nick, is kind of accurate, and I think um, that's what we're seeing with a lot of sole proprietors. Is like you get. I think about this as like, let's say the sole proprietor had employees. You gotta almost assume that you're the employee of the sole proprietorship, and that you're gonna get it forgiven based on the amount that you're given. But anything in excess of 100,000, you're really gonna need to have payroll to get anything more than that.
Got it. Excellent. And so in the same spirit, so that was real estate agent, and we can look at a contractor, right, with a whole bunch of tools, equipment, materials, like stuff on hand, right? So let's say they do have two subcontractors. They 1099. They don't have, but they don't have payroll for themselves. So they get whatever money they get from their clients comes into them 1099. And I'm just doing this again, specific example, because we have a bunch of contractors on this call. But they get 1099 from their homeowners, commercial owners, whatever. They take that money and then pay it out to their subcontractors. So they would still be taking the 12 months of their income, right, that they have received, doing the same calculation, annual, divide by 12, multiply by 2.5. That's their loan amount. And as long as, again, they take that 75% and are either paying themselves or does that make sense? Is it or paying their subcontractors because they're technically considered payroll for 1099 purposes? This is a question, really. I don't know.
Yeah, so I don't think the whole subcontractor is going to be qualifying as payroll. So essentially, let's say I get $120,000 of revenue in, and then my cost of doing that business is $40,000. I'm left with $80,000 net. That's how I would calculate what I could get a loan off of in potential forgiveness afterwards. So I don't think you can add in your subcontractors as quote unquote employees, even though you kind of feel like they are your employees because you need them to do everything in your business. And the reason is it's a simple double dipping. If you accounted them as your employees and added it to your loan forgiveness amount, and then they went and used the income that they received from you to go get a PPP loan, you're kind of double dipping there.
Got it. Okay.
Agreed.
Thank you.
All right. So that's the PPP loan. There's another loan under the SBA, the Economic Injury Disaster Loan Program. So this is a separate application, a separate process, a separate loan from the Paycheck Protection Program. And self-employed individuals and independent contractors are eligible for this loan as well. There's a couple of nuances with this process and this loan that make it different from the PPP loan, in the sense that one of the requirements is you have to physically demonstrate that your business suffered severe economic hardship from the virus, whereas the Paycheck Protection Loan is merely just substantiating your payroll costs and doing the math and applying. The SBA is going to look for proof of any sort of dip in revenue or activity in your business. There's no dollar amount or percentage that they have in mind right now, but just they want to see some sort of substantiation that you're losing business in a sense. The application process for this Economic Injury Disaster Loan is a bit more rigorous, in the sense that I can tell you it's going to take a little bit longer. It's all through the SBA's website, so you're not going through any banks or anything like that. The documentation that they're going to want to see in the application process varies rather significantly, in the sense that they're going to request at least 1 year and possibly more of prior tax returns. Your credit rating is going to factor into the approval. You may be asked to provide a personal financial statement. They may request a transcript from the IRS. So there's a whole host of documents and support that's going to be requested for this loan that is not included in the application process for the Paycheck Protection Program. So with SBA loans specifically, the Economic Injury Disaster Loan has a much longer term, payable up to 30 years at 3.75. Payments are deferred for the first 12 months of the loan, which kind of makes sense because SBA loans through the SBA are typically longer term and easier to manage. The big draw to this program is the $10,000 emergency grant that everyone's probably talking about. It's a $10,000 upfront grant that's paid out within 3 days of having your application approved, and there is no requirement to pay that money back. So that's being floated around as, you know, the highlight of this program.
If it's
Anthony,
real.
yeah,
We applied 2 weeks ago. Haven't seen anything yet. We'll find out.
Anthony, can you talk about the interplay with the PPP on that 10,000 too?
Yeah, so the interplay with the PPP loan is essentially that gets tacked on to the PPP loan, if I'm not mistaken, as far as
No, it comes off the loan forgiveness piece.
yeah, so it gets tacked on to that, and you're not able to factor that in for the loan forgiveness piece. So you know, just simple math is if you received a $10,000 grant and you had a PPP loan of $50,000, you wouldn't be able to have more than 40 forgiven.
Correct.
You know, and I applied a link to that web page on the SBA's website. If you can, you know, click in there. But again, it's fairly straightforward in that you can go right to the SBA.gov. It's the Economic Injury Disaster Loan Program.
Anthony, if I could just jump in with two very quick questions here.
Yes.
The first one is, are small businesses eligible for this, the EIDL, or is it better for them to have gone through the PPP loan program?
You're eligible for both. You can apply for both. The carve out is you cannot use both loans for the same purpose. And I'll get into that in my next slide. But to answer your question, you're eligible for both, and you can have both loans extended to your small business at the same time.
And a great question that we've seen that it was actually came up at our mastermind call last week, which is, how do we demonstrate losing business, since what we are doing now as either both a real estate agent, as a real estate investor, as a contractor, or any sort of other small business owner, was what was reflected 2 months ago in the work that you were doing?
So let me make sure I kind of follow you there. So the income from, you know, your work done last year is being shown in you know, presumably your profit and loss as of 2 months ago this year.
Correct.
Yeah, that would be a case where you may have to you know, explain the situation in the application process rather than just uploading, you know, a comparative profit and loss that shows your revenue is down from 19 to 20. You may want to upload or detail just the nature of your business and explain, you know, the situation as far as, you know, I have these proceeds that came in 2020 that were for 2019 contracts. If you can maybe provide some sort of substantiation to prove that it's just a timing and you know, collecting the receivable on that, that would be the best way to go about that, in my opinion.
Long story short is basically the more information that you can provide or that you can document, especially with maybe the EIDL program, the better.
Exactly.
Yeah, Matt. And like, one thing that you guys got to know here is you are self-certifying that you suffered economic hardship. So you're the one that's going to have to come up with the documentation on how that's affected you. But I do know that the program isn't designed to kind of audit you and say, hey, you're really not affected. You're supposed to self-certify. And on the PPP loan, really where the documentation is going to come in is you making sure you're using the loan proceeds for qualifying costs, and they're going to ask for canceled checks and all that stuff. But really, you're self-certifying that you're demonstrating this economic hardship.
And one last question, we'll sneak this one in here now too. If individual property is held in a trust, do they count as income for the company, or do they have to go ahead and file? Because this is a question that Nick and I were having to talk about with the PPP program. We have, Nick, I don't even know how many trusts and different LLCs for different things. But do you need to go ahead and file for each individual trust or each individual company as a collective whole?
With the economic injury disaster loan, it's my understanding that each LLC can apply on its own. I mean, because, you know, they're all operating under a separate business venture. So if you have a, X amount of LLCs, 3, 4, 5, you're eligible to apply three, 4, or 5 applications just because there's separate business ventures, even though they all lead back to, the same ownership or the same member. And then with the PPP loan, I'm not sure how that would interplay there, because the PPP loan is going off of, the net income from the self-employed individual. So it's drilling down into one individual's, tax return. But for each different activity, there's a loan opportunity, I would imagine, for each separate instance, as long as they're separate business ventures.
Got it. Okay, great.
So I have my last slide here is kind of a side-by-side comparison of the Paycheck Protection and the Economic Injury Disaster Loan Program. So, as I mentioned, the Paycheck Protection Program is primarily driven towards payroll and, like we discussed earlier, net self-employment income rather, as the approved costs. And the Economic Injury Disaster Loan, on the other hand, is not so specific as far as what those loan proceeds are for and used for. You can kind of think of it as a working capital loan for, it can cover payroll, but it can also cover fixed debt, cost of goods, things of that nature. So that's an important distinction. And then, as I mentioned on the last slide, you certainly can have both loans approved and taken out at the same time. However, they cannot be used for the same cost and the same purpose. So my second bullet here, Paycheck Protection Program is eligible to have, 100% forgiven if used for the qualifying costs. Economic injury, you're eligible for that $10,000 grant that's not required to be repaid. The Paycheck Protection defers payments for 6 months versus the Economic Injury Disaster Loan for a full year. Interest accrues under both loans. There's a difference in the maturity of each loan, and then additionally, the application process is vastly different in the sense that the Paycheck Protection Program is fairly straightforward, handled through your local bank, and the Economic Injury Disaster Loan is through the SBA's website. And as I mentioned, a significant amount of documentation is requested upfront for that application. So,
Anthony, great question here that actually I think surmises the two difference there. We have a lot of real estate agents on the call here we've hit the middle of the busy season here. The spring market is where a lot of agents primarily do the bulk of their business. People who have side businesses, whether they own property and rent them out in the summer, this is supposed to be their busiest season. But if you guys have already touched on, none of that stuff is happening this year. The rental market's going to be really a disaster for the short-term market. Nobody's looking to take vacations here in the summer unless this kind of opens up and things radically change very quickly. What would you guys recommend for people who are going to say, I haven't seen necessarily a large chunk of my business affected already. However, I'm going to see a large chunk of my business become affected in the next 3-4 months here as we end into the summer. What would you recommend people think about doing to apply for PPP or EIDL?
I would apply for both. I would get your application in for both as soon as you can. It's obviously not going to be an immediate response as to, the Paycheck Protection Program, I have heard, just a few days turnaround on the approval, and the SBA, the EIDL application, not so quick, but my recommendation would be apply for both. There's no obligation to take either one that you're approved for. And I would see what you're approved for in both instances and see what makes sense at that point in time. I think that, like I said, the SBA application process is probably going to take just a little bit longer anyway. So I would recommend at this point, get both applications in as soon as you can, just to weigh out your options. Because what you really would not want to happen is, 2 months down the line, when the Paycheck Protection Program loan is, drying up the funds, or perhaps you're up against June 30th, which is the deadline to apply. You really don't want to look back and say, man, I wish I had looked into that a little harder or applied back in April or early May when I was really close to doing so.
I think was the first within last week. There's been a lot of people who were told to the PPP program wasn't necessarily for them, and they would be better off served waiting for more things to come out with the EIDL. Is there any downside advantage or perhaps a disadvantage to applying for both, or is just kind of alluding to, is there a better upside to go ahead and apply for both, figure out which one is best served for you, and then go from there?
Yeah, the upside is to apply for both, to see which loan gives you the most flexibility and the best options. I would say the most immediate concern would be to apply for that Paycheck Protection Program because A, the money's going so quickly, and B, the deadline for that program is June 30th, whereas you have until the end of this year for the economic injury disaster loans. So that would be my recommendation at this point in time, is to get, the optimal scenario would be to get both applications in as soon as you can, just to kind of get your number and get in line for both loans as quick as you can. And then, over time, as things change, things change on a daily basis through these programs. So you want to make sure that you're not missing out on anything due to the fact that you waited to apply.
And Anthony, I would just point out that everyone's drawn to this Paycheck Protection Program because of the loan forgiveness piece. But that EIDL loan, 30 years at under 4% is really a good program if you can qualify.
And I think a good kind of question to go off of too is, do you guys envision that there are going to be more guidelines that are put out? I've seen a couple of people comment on, as a 1099 employee, they don't really know, and the feds haven't given a lot of guidance, or there hasn't been a lot of structure put in place how the 1099 folks are going to be able to be forgiven with the loans from the PPP program. Whereas with a small business, it's been just carte blanche. Everything is to be forgiven if you use the correct way. Do you think that there's going to be more guidance given out as this is going along? I know it just in the last week and a half, they've kind of already tweaked things a little bit. Do you envision more guidance being given on these things as we move along, and more things and more questions, and more people have applied who are asking the questions to go along as well?
To be honest with you, I don't think there's going to be much more guidance on how to calculate the loan coming out, to be honest with you. I was on a call with Mark Hayward, who's the regional director of the SBA, and he said the guidance that's come out so far is pretty clear that you can't use 1099s as employees for payroll costs. Where I see the guidance more so is on the loan forgiveness piece coming out. We're not too sure on, especially with sole proprietorships. I mean, although we think we know, until we get that guidance on the loan forgiveness piece, we're not going to be too sure.
Good stuff. I'll add to, if we're going into banks and for next steps, do you guys, I'm sorry, I apologize. Do you guys have a next steps or anything that you guys want to go over?
No. Yeah, I mean, anyone that has any questions, we're more than happy to help out. Just send us an email. I know I was trying to keep up with the chat, but it just got a little crazy in there. So I'm sure we didn't answer everybody's question, but feel free to reach out to us. We're more than happy to help during this time.
You can keep hitting. We still have about another 2 or 3 minutes, and I do have your emails on this last slide here, which is good. Just my experience has been for the self-employed people on this call. Definitely get with a bank that you already have a relationship with. I had a very good relationship with DCU, but I'll be honest with you right now, like, they've assigned one loan officer to the entire PPP program, and this poor guy, his voicemail is full. You can't get a hold of him, like, and it's frustrating. Even though you have a great relationship, just have some grace with your loan officers. Like, make sure you know that they're going through a really tough time too, because all these. I was told by Enterprise Bank last week that they don't even necessarily want these loans, right? Because they're all going to get forgiven, and they get paid on them, but it's just manpower going through all of the substantiation and verification of the forgiveness piece. Like, they don't want to have to deal with it. There's only 8 or 9 of them, right? And they're all working from home, and they don't have computers, and they don't have desks. So just have some grace with your loan officers, and just know that, start there. Start where you have a relationship. find out exactly what application or Excel sheets or information that they're going to want you to provide, and start working on it tonight if you can. If they don't have it until tomorrow, a lot of them we were waiting. The challenge was, I guess, what Chase Bank didn't even come out with their portal. They were playing with technology for so long.
Yeah,
that,
Bank of America was the first one to get out there. Wells Fargo said they didn't have anything and wouldn't have anything right away. Chase Manhattan really kind of messed it up, and they didn't have anything either. So it was really kind of dependent on where you were banking. If I could actually ask a question, I think this is going to be a great summary of that, what you're just talking about there, Nick, to both you as somebody who's been through it, and then to Anthony and Ron as well. Ron and Anthony, I'll start with you. Is there a checklist maybe of 5 documents that you would say are the absolute must-haves with you to go to your bank to have, to say, to have with you as you're getting ready to apply for this, to start with right away?
Yeah, so if you're a sole proprietor, here's what I would have. If you have employees, I would have all your 941s, your quarterlies for 2019. I would have your 940 for 2019. And then I would also have, if you filed your 2019 return, a copy of your Schedule C, or if you haven't, at least put together some sort of interim financial statement that you can at least present to the bank to say, this is what my income is. They might request your 1099s that you receive. I've had a couple applications that I put in. And to be honest with you, one thing that I don't think we've mentioned is I put in applications for sole proprietorships already. I put them in with the banker just so they got quote unquote in line. So talk to your bank. They might accept them now. They might not process it till tomorrow, but you might be able to get in line before some people wait at 12:30, 1 o'clock in the morning to submit it.
I think you're exactly right. I think this is a great opportunity that if you guys don't have a relationship established with one bank and are using 3 or 4 different banks, really look for this as an opportunity. Having gone through this ourselves, we now have established phenomenal relationships with one particular bank that we feel comfortable moving forward. Nick, can you speak to what we've done and what you feel having gone through it and having, I was going to say you having pulled out your hair, but you don't have any hair. Having gone through the pain of all this, what is something that you would say to anybody on this call trying to get going with it that you feel as though you would wish you had brought with you the first time around?
Yeah, so we're doing it. Ron and Anthony gave some good advice, and the bankers want this too. They're saying January 1 to December 31 of 2019, right? In our specific case, we had a huge uptick in payroll costs January through April 1 of this year. And SBA has said that we are allowed to use like the trailing 12, but as Ron and Anthony already said, the bankers probably, it's going to be harder to substantiate, right? They want your 940s, 941s if you have W-2 employees, or they want your 1099s if you're self-employed. So like we're trying to substantiate April 1 of last year to April 1 of this year. And they all want tax returns. They want year-to-date P&Ls and year-to-date payroll if I'm doing the January 1 to April 1st. And it's been challenging because the banks themselves don't even know what they want. We've had, so our great relationship at DCU, he's come back 4 times with different information Excel sheets that he needs us to fill out. Now they're all the exact same thing, but they're filled out slightly different. Like one time he wanted it broken out by month, then he wanted it broken out by employee per year, then he wanted it broken out by employee per month per year, right? And what's a 1099 and what's a payroll cost and what's like, it's frustrating because they don't even know yet what they're asking for. So that's why I said, like, I've been just trying to have grace with him and do my best to kind of get things back to him. But even today, he just sent another request an hour before we had this webinar. Like, so I don't even know if everything's been submitted yet on the W-2 PPP side. And for all of you guys, and including us ourselves, for the 1099 PPP side going out tomorrow, I'm assuming that's going to be very similar, if not the same. They're going to keep coming back for more information. And you just got to have grace and fill it out the way they want it filled out and submit it back. That's been the biggest challenging part because it's been a full-time job for me.
And it's been an absolutely fluid situation as well. There's a level of fluidity to it, I think, as these bankers are learning it themselves. This is something that was rolled out literally overnight. This started last Friday, And I think Thursday night at something like 12:53 or some ridiculous number, the government put out their recommendations and their guidance. So this is a completely fluid situation across the board. My advice to people on our end, on the operations side of it, would be just to accept the fluidity of it, be willing to roll with it, and then continue to go from there. As we said, have all your documentation, have as much documentation as you need. There's no such thing as too much documentation, as Ron and Anthony have mentioned time and time again.
Yeah, guys, we've done 250 applications so far, and we've seen one get funded. So it's a slow process.
Ron and Anthony, are you, so, I mean, we're obviously not here to sell, but not that you want any more of these, but are you guys in the business of assisting employees with submitting these things? Or they have to be current clients? Go ahead.
No, I mean, if anyone has any problems with the application and it's a quick answer, we're more than happy to help. But if someone wants us to actually fill out the application and do the calculation for them, well, we'd probably have to talk to them about charging a fee.
Yeah, that's awesome. So you need a professional to lead you through this tough time. And those agents and contractors and real estate investors, I mean, you guys obviously already know. You need someone in your corner. Just a quick note. Tuesday, April 14th, we're continuing. This conversation was huge, especially with Ron and Anthony providing the in-depth details on how you can financially benefit. But for those real estate investors and contractors and agents, if you want, or vendors, Tuesday, April 14th, we're going to be doing the Black Diamond virtual Black Diamond Real Estate Investors meeting. And it's going to be on COVID, the Oh Shoot Now What Real Estate Investors Edition. Specifically, we're going to be really getting into investments, and if you have fix and flips that you can't sell, or fix and flips that you're in escrow, what do you do? If you have, if you're a landlord and you have some tenants, what do you do there? And the different tip practices for real estate investors specifically. Check us out. Go to blackdiamondrei.com. There's another banner. You can register for that. It's a free meeting, and it's at 6 p.m. on Tuesday, April 14th for that. And other than that, well, this is just a quick, we have our podcast, shutupanddoitrealestate.com if you'd like. We also have our meetup, which is on hold, but here's all the contact info for everybody today. Feel free to email questions to us. Again, so we're not going to say we can answer anything. Ron and Anthony are also super smart. They might have the answers to most, if not all, of your stuff. But I want to just close by sharing again to everybody, this is a crazy situation. We all know that. But remember, this is about mindset. And if you can last, we are absolutely all going to last because we are very smart on the health side, right? Health aside, we all know about social distancing. We all know to stay out of groups. We all know to kind of hunker down and do what we got to do for these next 2, 3, 4 weeks, right? Like, let's do what we got to do there to get through that. And then after that, it becomes purely a game of finance and a game of cash flow. Can you withstand the storm? And I promise you right now, as an agent or a contractor or a handyman or as a real estate investor, if you can withstand the storm, cash on hand, 3 to 4 months, most of the competition is going to be going away because they will not be able to withstand it. They have not taken advantage of the government incentives. They've been putting their head in the sand thinking that they've got this, right? They have not taken note of their current cash situation and how much cash they have burning to that they can survive. Those people who are taking this time now to slash their expenses and really understand their financial situation and taking advantage of these government incentive programs, like, guys and gals, honestly, like, this is going to be an incredible economic situation. The wealth shift that is about to occur over these next 12 months can change your business and life for the rest of your life. This is what happens in every downturn. Will you be prepared? And our commitment to you, and a huge thanks to Ron and Anthony, Matt and my commitment to you is to help you be prepared. So reach out to us. And if you want to join up one of our teams, awesome. If not, that's okay too. We're here to help. And we'll probably be doing more of these things as details change. Maybe we can, lucky enough, get Ron and Anthony back on here for an update maybe in 2 or 3 weeks, depending on if anything changes or not.
Yeah, me too.
Oh, you guys are great. So with that, I know we're past our time. Matt, do you have any final thoughts or anything?
I appreciate everybody's time today. Hope people were able to get something out of us. Ron and Anthony, thank you so much for the time today, guys. This was great.
Thanks, Matt and Nick. Appreciate it.
Yeah, thank you.
You guys are great. 3, 2, 1, deep breath. We've all got this. Be prepared. I'll see you guys in the next one.
All right.